What's going on, YouTube? I know I'm absolutely late as hell to the party on this one, but about a week and a half ago, there was a Wall Street Journal op-ed talking about FHA mortgages. And honestly, I saw the YouTube videos about it. I saw people talking about it. I saw the conversation, but I didn't really understand what was happening, and I didn't want to speak on it too early and absolutely have no idea what I was talking about. So I now know a little bit about it, and I want to talk about it because it is interesting to me. I don't know. I think there was a lot of hype about it and people exaggerating a little bit about how bad it was, but I do still think it is worth discussion, I guess. But basically what it comes down to, FHA, if you don't know what it is, I've looked into it a little bit myself personally, just because I'm looking at buying my first house sometime relatively soon, hopefully. Federal Housing Administration runs this loan program through the federal government. You need to have 3% down, a 580 credit score, and your debt to income limit for that loan is 43%. Pretty high debt to income. I don't know if you've been watching the videos or if you pay attention to finance topics, especially on YouTube. I'm personally aiming for something like sub 30% on a 30-year loan. I'd like to get around a quarter, 25% of my take-home pay, something towards the mortgage. Whether that's really realistic or possible, I don't know. If you're a big Dave Ramsey fan, maybe you've heard the quarter of take-home pay before, but he wants you to do it on a 15-year fixed. What the hell is going on? This thing is shakier and shit. Apologies. And I don't really know if that's possible. I was actually watching a video of his today that was talking about that, and I watched a lot of Dave Ramsey. I don't remember him ever stating it like this in the past, but it almost seems like he's tweaking his position a tad and changing his opinion over to 25% of take-home, but then he made a point to elaborate and say your take-home is before 401k, before health insurance, before all the pre-tax things coming out, which in my mind makes no sense. I don't agree with everything Dave Ramsey says, but I think overall he's got really mostly solid principles, and I mean a lot of what he says just makes sense mathematically, so it is what it is. But this makes no sense to me. When I'm doing take-home pay, if I'm looking at a mortgage on take-home pay, I'm looking at all the medical insurance premiums are taken out, the retirement's taken out, everything is already pre-tax, taken out of the check, and I'm looking at what comes home and hits my bank account from the check. I'm not cutting my retirement contributions to pay a little bit more on my mortgage payment. So I don't know about that. But let's get back to the FHA thing, because that's, like I said, that's what I wanted to focus on. It blew up on social media, I think, a little bit too much. The big deal, then the headline was there's 1 million of these FHA loans in default right now. And the real problem with this is how they're in default and why these houses aren't coming to market. The article claims, and it's an op-ed, is claiming that it's basically the Biden administration was, which it's not really a claim, it's just, I mean, they were. Basically, anybody who couldn't afford these payments, they're either making these payments through the FHA program, through the loan program, they're covering these payments, but more often they're actually just taking the payment and acting like you didn't miss it and tacking your owed balance onto the back of your loan. What the hell's going on here? This guy's telephone poles on his yard or something. I don't know what the hell this guy's doing. But they're tacking your missed payments onto your end of your loan on your 30-year mortgage. So basically just stretching your mortgage to 35, 40-year mortgages when you just keep missing these payments, where you already have, I'm assuming, a pretty solidly high interest rate, 6.5%, 7.5%, if these homes were bought in the last couple of years. Because this rate of how many people have bought these homes, obviously, if you bought a home in the last 2 years, you have a higher interest rate than a lot of people in the past. I was looking at some of these random stats here and there where I could. Not very many people have interest rates this high. So I think the stat was something 83% of mortgages have interest rates below 6%. And I mean, you can see that if you're paying attention to the housing market generally, you'll be seeing all this. Nobody's buying homes right now. Nobody's selling homes right now, because why would you? If you have a 3.5%, 4% interest rate, I don't know, some people have like 2 point something percent interest rates. Why in the world would you sell your home to go to a 6.5%, 7% interest rate, depending on your credit? I mean, it makes zero sense for anybody to do that. So nobody's selling homes. We're coming out of winter time into spring. Spring and early summer is like the hottest housing market time. So we'll see if the home sales like jump. I personally don't think they will, because home prices aren't going down. Interest rates just within the last couple weeks have went down a tad, but not enough to make a huge difference. I was running the numbers here a little bit before. Like I said, I'm personally looking at a mortgage myself. It's very hard to get within these parameters I'm talking about of, hey, you want to keep your mortgage under a 30 your take-home pay, you want to keep it under a quarter, you're going to be hard-pressed to do that. And I'm in the middle of nowhere, Ohio, man. Like, if you're in a city, even if you're in an Ohio city, Columbus, Cleveland, Cincy, hard-pressed to do that. If you're in a East or West Coast city, any of these big cities in Texas, I mean, good fucking luck. I mean, hopefully your income's quite a bit higher, but I don't think it's going to be that much higher to balance out how much these homes cost, because it's getting astronomical, honestly. And these FHA mortgages, they're the hype and the clickbaity part was people comparing it to the subprime crisis in 2008. So, I mean, yes, but no. Like, I mean, you can say whatever you want. Obviously, anybody can say whatever they want all the time. It's not the subprime crisis. Like I said, 1 million mortgages. Sounds like a lot. It is a lot. God damn, this thing's bouncing all over the place. In January, this past of 2025, so 2 months ago, 900 and some thousand homes were on the market for sale. So you can't really equate like 1 million homes that haven't went to market to 1 month worth of. It's not like 1 million homes move in the United States every month, but it's the other number is like there's 90 million mortgages in the United States. So it's like less than 2%, which isn't nothing. Like, I don't think you can just be like, oh, it's less than 2%. It doesn't matter at all. It's still a lot of homes. I mean, if a 1 million homes came to market, obviously they wouldn't all come to market all at once, but if they would have came to market over the past year, that would have been at least a little bit of pressure on the housing market to keep prices a little bit lower. Would it have been a game changer? To be honest, I don't think I know enough to say that one way or the other. It couldn't have hurt, though. We can say that. And it definitely isn't good that the government is basically keeping these people afloat with tax money or floating their mortgage to the end of the term, just so they don't get foreclosed on. And really, I think more than anything, it seems like it was just done to skew economic data that nobody was getting foreclosed on and to make everything look good. I don't know. I don't like that. As of right now, the people that have these mortgages, there's 66% of these FHA mortgages have debt to incomes that are at 43% or greater. So you're really pushing it, like you're stretching it. I mean, if you're a household and you truly are just two adults that pay the mortgage, or you're married, or if you're not, whatever, you share the bills. If you're at 43%, you're one job loss away from being really in a tight spot. That's why like I said, in my personal goings on, when I'm trying to look for a house, I'm trying to keep it low. I'm trying to be able to, if I lost my job tomorrow, I'm trying to be able to go work at Walmart, and it would be shit, but I could afford the mortgage just in case. I don't want to put any kind of risk, especially with the baby and stuff. Like, we got to keep the risk to a minimum now. Personally, and my retirement and things like that, we can bump the risk up, but housing, I'm not really willing to take any risk like that. I'm not willing to stretch myself to be able to pay the mortgage and really test the debt to income limits. I don't want any part of that. And like I said, I mean, there's so many people that are in a good spot with their mortgage, low interest rate. They have huge amounts of equity in their home because house prices have exploded in the last 5 years, to all of our detriment. That if you're watching this and you're looking for a home, you know exactly what I mean. You go scroll down to the bottom of the Zillow page and you see they bought it 5 years ago for $150,000 less. And you're just like, fuck, dude, I don't want to be the one who pays the extra 150 grand. I just don't want to be the person. Me and my wife are having this discussion right now of like, hey, how long can we wait? In theory, whether we want to stay in an apartment with 2 adults and a baby kind of jammed into an apartment, it's not the worst thing in the world, to be honest. It's a little crowded. You got I'm stepping on toys and shit like it's a Legos commercial or whatever. And it's not ideal. But, like I said, I've looked at this. I mean, we're looking at houses right now around 250. I would maybe consider stretching to under 300 grand for a home. We could technically afford it. I don't want to, though. With today's mortgage rates, you put 10% down. I was doing rough numbers with insurance, taxes all included. You buy a $250,000 house with 10% down, your payment's like almost $1,900 a month. No utilities, just mortgage, tax, and property and homeowners insurance. That would be, to my wife and mine, debt to income, we'd be at like 27%. Like I said, no utilities. Whether you want to keep that in the calculation for housing expenses, do whatever you want. Doesn't matter to me, but I personally am trying to account for everything housing related in there. And like I said, we're already getting, I mean, that's a $250,000 house. I Googled it and looked into it a little bit. Ohio's technical median home price is like 255 grand as of last year. I mean, yes, and I'm not trying to shit on Southern Ohio or anything like that, or even there's parts of Northeastern Ohio that are the same way. Old Steel areas, and Southeast was like, it's basically Kentucky, West Virginia. So if you're from there, it's the same kind of deal. You know what I'm talking about. I'm from the middle. Mansfield is literally dead center between Cleveland and Columbus. We're technically Northeast Ohio, I think. This town used to be industrial, and it's not anymore. People don't make that much money. There's some shitty housing in the cities. I mean, you can go buy a house in the nearest big city to me, 60, 70 grand. Do you want to live in a $60,000 to $70,000 neighborhood? Probably not. It's not going to be ideal. You're not going to, like where I grew up, we live in the middle of the nowhere, sticks outside of this city that I'm talking about, but you can't find a house like that out here anymore. I think my mom bought the house we grew up in for like 40 grand. Didn't have any plumbing in it, and they stripped the copper out before they left, but it was doable. Not anymore. You want to buy a house out here, it's going to be 200 to 400 grand easy, and if you have property, it's going to be $500,000-$600,000 probably. It racks up really quick, and a lot of these homes have got some land. It's beautiful, got a couple acres, everything's nice, but you're going to pay out your ass for it because it doesn't come cheap. And like I said, you go to a big city, you go to Columbus even, that's the biggest city we have in Ohio. I mean, 400 is pretty much bottom of the barrel unless you're living in a kind of tough neighborhood. Like, you want to live in a suburb, it's going to be 350, 400,000. That's just what it is. And I don't see it changing anytime soon, but like I said, everybody has a limit as far as when and where they want to buy their home and how they want to try to run it. My personal opinion is wait as long as you can. I'm going to try to talk my wife into waiting as long as she can. Obviously, the baby, when we want to have more kids, if we have another baby, got to have the house. So there is a timetable on there that can get shoved up pretty quickly if you're not paying attention. And if you're a person who just wants to buy a home, I mean, is now the best time? I don't know. You can find anybody can confirm your bias one way or the other if you really want. I'm trying to be as transparent as possible on here, on the channel and stuff like that. And just, like I said, I'm just kind of taking it all in. Nobody really knows as far as rates go, prices. I mean, prices in the next 2 years could just go up another 5% each year, or they could tumble 10 to 15% or 20%. Who knows? Could we go into a crazy recession? Could. Will we? Don't know. There's no way to know. It does suck. It aggravates me. I don't know. That's my biggest fear, in the sense of I just don't want to be the person that buys a house right now, and then 2 years from now that house is worth $60,000, $70,000 less than it was because home prices just tanked because we go into a recession or you get laid off, all this stuff. But I don't know. You guys let me know what you think, honestly. Is right now a good time to buy a house? Let me know in the comments. If you liked the video, leave a like on it. If you didn't, dislike it. And I'll catch you guys tomorrow.